What is up, you guys? Pete DiCarlo here, and today we are going to talk about how you can make money in a bear market. I got my coffee, I've got my notes. Let's get started. So today is Tuesday. The market was closed yesterday for President's Day, and some news came out about a big company called Apple. Apple released a statement yesterday saying that they might miss Q1 revenue because of iPhone delays due to the coronavirus. For those of you who don't know, a lot of big companies such as Apple have huge factories where most of their work is done in China. And with most of China shut down because of this coronavirus, there's a big chance moving into the next quarter that a lot of numbers could be missed. Because as of right now, China has a lot of their country on lockdown pretty much indefinitely. And I think that going into the next couple months, a lot of other big companies like Apple will come out saying that, hey, we might have to cut guidance for Q1 because we're running into the same problems. For instance, look at a company like WYNN Resorts, when one of their biggest properties is currently shut down right now in Macau. And on top of that, not a lot of people are even traveling in China for the fears of catching the coronavirus and spreading it even further. We also know that companies like Apple and Tesla even have shut down their factories indefinitely. I believe that they were supposed to reopen February 10th, and it's now February 18th. And we're going to see how long this will continue to go on for. Even companies like Starbucks have had to go ahead and shut down a ton of their retail locations in China. And while it's sad to see so many people sick, infected, and dying, I don't really think this virus is going to be a black plague that wipes out a huge part of the human population. We've seen it before with Ebola and other viruses like that, and I do think that in the long term of things, this won't really have too big of an impact. Although I do think it could have some serious negative impact on the market within the short term, especially when we go into the next earnings season. I am personally surprised that the market is just continuing to make new highs and new highs, and I feel that we're really not taking this coronavirus seriously enough. I believe we will really see the impact on companies going into the next earnings season, and I personally think we will see a pretty heavy pullback once that eventually happens. If the coronavirus continues to get worse and worse, there are some serious things that I think could impact the market. Like, one, many companies might miss revenues and give poor guidance for the following quarters. And like we already spoke about, Apple has already done this. They've already cut their guidance and given the investors a heads up that, hey, we might miss revenues. And like I stated before, most of these facilities were supposed to open a week ago and they are still closed indefinitely. Who knows how much longer this will go on for. So if for some reason this could continue for another 3-4 weeks, maybe even 2 months, that would have serious implications on the market and American companies. The next thing to look at is travel stocks. Travel stocks have been getting slammed. I said before, WYNN Resorts, but even look at a company like Carnival Cruise Lines. Not only are they taking a hit because of the virus, but also nobody wants to travel right now and nobody wants to take the risk of accidentally getting this virus. And if you've been paying attention to the news, you will see that cruise ships already have had mass problems with people being infected and affecting the rest of the cruise liner and then spreading it throughout the world. And the third thing is China's GDP. Now, if you don't know what GDP is or why it's important, it has a lot to do with not only the stock market, but the economy. GDP is short for gross domestic products. So each country will have its own GDP, and the world could even have its own GDP as a whole. GDP is made up of not only products, but services. You were to add up all of the income from every single state within the United States, you would therefore have the United States GDP number. And this is important because the GDP is a good indication of how healthy the economy is. And it's essentially how much money the country is making. And if GDP lowers 2 quarters in a row, this is technically defined as a recession. And obviously, with parts of China completely shut down and a lot of factories unable to resume work, I would assume that China's GDP for this quarter will probably go down. And if we see the GDP in the next quarter go down as well, if this virus continues, if that happens, China could technically be in a recession. Not only would it affect China and the rest of the world, but it would affect the United States and our markets, because a lot of our United States companies have main factories in China. I do think that we're going to see a pullback in the markets going into the next couple months once we see really the extent of damage that this virus has done, as well as how long these factories and retail locations that pertain to the United States companies are shut down for. The point of this video is just to teach you guys how you can still make money when the market is in a downturn. And for a lot of you guys, you probably haven't even seen the market in a downturn because we've had this insane bull run for almost the past 12 years. And it's unfortunate because they think you can just throw money in the market and make insane returns every single year like we have been recently. But in reality, that's not the case. So I'm gonna go over 3 ways that you can still make money when there's a downturn. The first way to make money when we are in a bear market is to learn how to hedge. The definition of a hedge is just buying one investment that will reduce your risk of another investment. So let's say you have $100,000 and 70% of your portfolio is in the market. The other 30% is sitting around for cash in case the stock market crashes. You obviously will have a ton of risk if for some reason a bear market happens and we are in a long-term downtrend. Because you're just long, you have nothing to protect the backside of that portfolio. What many investors will do is instead of cashing out their long positions as the market is falling, they will take a hedge out on the market to protect the downside risk. Because long-term, fundamentally, if nothing has changed about these companies that you own, there really is no reason to sell, especially if it's just some short-term news in the market that is pulling everything down. So what people will do is keep the positions that they originally have and buy some puts on, say, the S&P 500. And if done correctly, what will happen is that the gains from the S&P puts that you have will outweigh or equal the losses that you're taking in the short term from your long positions. This is a strategy that is primarily used for longer term investors because you need to have a sizable amount of long positions in order to make this hedge really worth it. Now let's just say you buy this put and as soon as you do, you time it terribly, the market just continues to rip. Yeah, you will still make money on the longs and you will lose money on that SPY put, but the point is that it really is trying to keep your portfolio equal and mitigate the losses that you could have potentially taken. The second way to make money in a down market is to learn to trade puts. As I did talk earlier about puts when you're hedging, this would be more for somebody who is a trader. If you trade for a living or you like to swing trade, knowing how to trade options is important and can make you a ton of money, especially in a down market. For those of you who don't know anything about options or you're just starting to trade, I completely advise against this. If you're going to trade puts and you're going to trade options in general, you should be at least in the market for the past 3 years. You need to have a fundamental understanding of what you're doing if you're going to be trading options, especially puts. One of the worst things you can do as a trader or even an investor is to go against the trend. I've seen a lot of people lose a lot of money, including myself, trying to time the drop or time the pullback of something. Your best bet is just to always trade with the trend. Remember, the trend is your friend. If you want to make money in a downtrending market, you can learn to trade puts. Now, if you're going to trade a put, you would use technical analysis to find a calculated play. This would help to minimize your risk while maximizing your potential profit. I will make a video on options in the future, but for right now, just know that learning how to trade puts in a downtrending market can be extremely profitable. And the third and final way to make money in a downtrending market is pretty much the simplest, easy thing that I would recommend almost every one of you to do, and that is just waiting for a good opportunity. When people start investing and start trading, they think that they need to just have all of their money in the market. Especially as a trader, you feel like you just have to hop into anything that looks decent so that you can consistently make money. Always remember, guys, cash is a position. And while a lot of rich people say cash is stupid, I'm not talking about having physical cash. I'm talking about having liquid assets inside of your portfolio that if something happens and a good deal comes your way, you can hop on it. If you think that the market is overvalued or a certain company that you want to invest in is just not at the price point that you want it at, just wait it out. If you want to start investing now, but you're worried about volatility because in the short term, the coronavirus scares you and you think the market's going to continue to pull back, just wait it out. I mean, for instance, look at December 2018. If you were to have just been patient waited for the sell-off, and even just bought the S&P 500 right here. Not even waiting for the perfect bottom and timing it, but just waited a little longer, you could have gotten insane returns since then. Honestly, when in doubt, just wait it out. That was so corny. When you're worried, just take some time, walk away, and be patient. Cash is always a position, and I've made some of my best returns just being patient. All right, guys, thank you so much for watching this video. If you liked it, hit like, subscribe to the channel, share this video with your friends and family. If you guys want to be a part of my private stock market membership group, I will link it down below. You get access to all of the courses that I've created, as well as my private Discord where you can see exactly what I'm trading and exactly what investments I am looking at. It's a great community to be a part of, and we would love to have you. As well, I created a free stock market intro course for beginners who want to start investing but don't really know what to do. That will also be linked down below. It's 100% free. Thank you guys for watching. Until next time, I'll see you.